presentation contains current opinions of Moise Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor, and are subject to change. Nothing in this presentation should be considered investment advice. We make no assurance that Mo's opinions or illustrations will accurately predict future prices or financial markets. In no event is past performance a guarantee of future performance. A detailed disclosure can be found at the end of the presentation. And now here's Mo.
Hello everyone, and welcome to the Compak YouTube update for October 30th. 2023. I'm Mo Ansari, President of Compak Asset Management, and don't forget to go to compak.com/media and just put in your email and subscribe, and you will get all the information, the weekly updates, the market, the weekly podcast, the YouTube updates, all the upcoming events. And you can also subscribe to our YouTube podcast with the Market Minute. All of the information, all of it is free. All you have to do is go to compak.com/media, put your email in, and subscribe. That's all you have to do. I'm going to talk about the market, what happened last week's market. It was not pretty as far as the market moves were concerned. We saw, looking at the latest news, we saw economic news. It was okay. Weekly topics, we're talking about interest rates, inflation outlook, and I will take a look at the technicals. Looking at the S&P, down 2.52% last week. But if you look at the EFA, only down 0.76, emerging markets only down 0.61. So we are starting to see the emerging markets finally outperform the U.S. market. Is this something that's going to last? We'll have to wait and see. When we look at the technicals, again, the defensive sectors, the utilities did well on a weekly basis. The worst sector, communication services and energy for last week. That's what we saw. When you look at year-to-date, still the fabulous seven, or the magnificent seven, or whatever you want to call them, the technology stocks have been leading the way, but they are starting to lose some momentum, and we're starting to see the market broaden out a little bit. When we take a look at the bond market, for 1 week, the rates were up. U.S. aggregate, when you look at the U.S. HEG, up 5.58. Corporates are 6.25, 6.26. 10-year hit 4.93. It was as high last week. This week, 4.86. But it did get to that just about 5%, 4.99 and change. As you know, last October, I pointed out where the Fibonacci numbers were pointing towards as far as the peak in the interest rate market. I'll show that to you when we take a look at the chart. Commodities were down slightly this week. You look at the manufacturing, finally it's up 50, above 50. That shows expansion. Services up at 50.9 shows expansion. Initial unemployment scheme edged a little higher, but not. Unemployment is still holding down, and employment holding up very strongly. When you look at the majority of Q3 earnings this week, they're already out. Most of the big techs are already out, and they were not bad. But the market found some sliver negativity and pushed, especially Google, to the downside. Microsoft earnings were great. You look at Meta, it was great. You look at Amazon, the earnings were great. But the market looked for some negativity and pushed the market down. I just think that's part of a normal correction, more than a beginning of a bear market. That is the big question everyone is asking. Is this the beginning of a bear market, or is this a normal correction? I'm going to answer that on the podcast today. Javed and I are going to get into a lot more detail on that particular subject. We have the FOMC meeting this week. That's the Fed. They will tell us what they're going to do with interest rates. Well, 99% probability that leave rates unchanged. It's not what they do, it's what they say. What are they going to say? Are they done raising interest rates? The market has already raised rates, like if the Fed had raised another 0.75% or 3 more 25 basis points. That's what the market has done. It's gone up 80 basis points already. The market has done most of the Fed's job, I feel, at this time. Look at inflation rates. You can see the outlook. If commodity prices come down 30%, we can see inflation coming to 2% by September of next year. If commodities stay right where they are, we sort of see inflation going sideways. Commodities go up by 30%. That could push inflation back up. I will do a webinar next on the 14th. It's going to be the last webinar of the year, so make sure you register. And again, if you go to compak.com/media, put in your email, subscribe, you will get the notification for the webinars. Looking at the technicals, we have to get about 42.41. That's what we have to see as far as the market is concerned. And that is the 20-day moving average. That's what we have, a 200-day moving average. We today closed at right about 41.77 or so, right about there. We have to get about 42.41 to say, okay, it's all clear, we have made a bottom. But if you take a look, the ABC has happened. We see a lot of divergences on the technical indicators where the market has made new lows, but the technicals did not go to new lows, just like we saw last March. If you look at the RSI, it went and made a low, the market came and made a new low in March, and the technicals did not. And the market came right back up from there. On the weeklies, 41.75 is the number that I'm looking at right now. That's the critical number for on a closing basis. If we can close above that, that would be good. NASDAQ, 12,794 is the 200-day. Guess what? We managed to get above that today and close back above the 200-day moving average. So is this a correction? I think we just got all the long-term people, the trend-following system stopped out of the market because it broke the 200-day. Now it comes right back in, and that is what we see with some of these trend-following systems. On the weekly technicals, again, 10,370 for the NASDAQ, if we can get stay above that, which is a good sign. 10-year note, as I'd mentioned, right here is the number that we had talked about, and that is the number we're looking at right now, 4.93. This was the projection from last year's high. Well, we got there right here for the last week and a half. We sort of bounced around in that particular area, and that's what we're seeing right now. I think we are going to continue to see this in the 4.93 to 5.03 area as long as we stay there and drift below 4.78. That would be a good sign for me. Gold broke out above the 200-day. People are buying gold for safety because of the geopolitical events. I think if we see some slowdown in the war, that could bring gold back down on a corrective mode, back down to 1950 or so, which happens to be the 200-day. But we did finally get above 2,000 in gold last week for the first close we've seen in quite some time. Crude oil backed off from the 95 area. We're somewhere around 82.5. 78 is the 200-day support in crude oil. Again, there was a big premium put into crude when the war started between Israel and Hamas. Now people realize as long as the war is contained between Hamas and Israel and does not expand to the northern part of Israel or Hezbollah and Syria, we don't see any impact financially on the markets. Again, it's a terrible situation in the Middle East, and all of our hearts and prayers go out for all the people there. But from a financial point of view, no impact as long as the war does not expand. Those are my thoughts. Those are my views. Again, if you want the detailed podcast that I'm going to do today, just go to compak.com/media, put your email in and subscribe, and you will automatically get the podcast when I do it, a 1-hour update on the markets. I'm Mo Ansari. I will be back with you at the same time next week. Until then, good trading.
This presentation contains the current views and opinions of Moise Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor. The views expressed are current only as of the date of this presentation and are subject to change. Nothing in this presentation should be considered investment advice, and nothing is personalized to any investor's individual circumstances. Compak Asset Management offers investment advice only after entering into an investment advisory agreement and gathering client-specific information about goals, objectives, financial status, and risk tolerance. This presentation uses terminology associated with technical analysis and provides charts to illustrate some of the concepts discussed. Technical analysis is a security analysis method with the goal of forecasting the direction of prices of securities or market indices through the study of past market data, primarily price and volume. We make no assurance that past performance or the use of technical analysis will accurately predict future prices. Further, a risk of technical analysis is that over-focus on historical patterns could lead to ignoring or downplaying security-specific concerns, overall market or sector concerns, or other factors because we assume inaccurately that historical patterns will repeat themselves. In no event is past performance a guarantee of future performance.